This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Wednesday, August 21st. This is actually my third time recording this introduction piece of today's podcast. I don't know how deep I want to go into this rabbit hole because I know a lot of you are still very hopeful and look at the world with fresh eyes that are not as cynical as mine, and I don't want to bring you to my level. So I'm going to keep this much shorter than yesterday, but there are things that I must cover. Some of you, I believe, know that what's going on in the marketplace is all a magician show, but many of you still believe. Many of you are still plugged into this matrix that we call the experience that we are all in right now. But I don't want to digress too soon. I will later. Let's cover breadth numbers, shall we? So on Wednesday, August 21st, we had 922 new highs versus 83 new lows. So new highs is outpacing new lows by almost 10x. We had 75% of stocks advancing versus 21% declining. 33% of stocks are below their 50-day moving average, which is better than yesterday. And we had 33% of stocks below their 200-day moving average. The Dow closed down 3 points, right where we closed yesterday. So basically no change on the Dow. The Nasdaq closed up a little bit over 50.5%, or up 102 points. The S&P 500 closed up 23 points, or 0.42%. And you had the Russell 2000 up 1.3%. So it outperformed all other indices today. Taking a quick look at the sector groups, all were green. Every single one. But let's go over what led. Was it technology? No. Basic materials up 1.37%. Consumer cyclical, interest rate sensitive is consumer cyclical, up 1.36%. Industrials up 0.86%. Consumer defensive up 0.71%. If you recall, consumer defensive led yesterday. Utilities up 0.65%. Where the heck is technology? Utilities up 0.65%. Oh, there's technology up 0.58%. Real estate up 0.45%. Praying for rate cuts. Healthcare up 0.3%. Financials up 0.06%. So it's pretty much green sector day. The volume was very light. I messaged my paying subscribers at like 3 something that it was half the average daily volume on the SPY. Very, very light volume. Today it was basically FOMC fake jobs data powered by your favorite AI technology company. This was pretty alarming. That I'm not shocked. I've been telling you all that the jobs data is fake. But the brassness, the cojones, the balls of all of these government agencies to report 800,000 plus fewer jobs than previously lied about. And no one's like up in arms. Nobody. Oh yeah, whatever. It is what it is. No, yeah, I got my Apple. I got my Nvidia stock. I'm all good. Like, no one gives a F. I suspect we are near the complacency levels of like 2006, 2007, where just nobody gave an F. And everyone was just drinking the Kool-Aid. It's like Great Gatsby. Everyone's got their Tesla. Everyone's got their Ford pickup trucks, SUVs. As long as they keep telling us these sweet lies. I'm going to read a quote from my mentor, Bill Cara, because he put it more eloquently and actually linked to some important links here. He had wrote this morning, "The fallacy of government-produced labor reports." I'm quoting, I'm going to include it in the show notes so you can take a look at all these links. But he says, today, the U.S. Bureau of Labor Statistics reported 818,000 fewer jobs in March of this year than initially reported. He has 3 links, which I'll include in the show notes. The first one is the BLS, Department of Labor agency managed by the commissioner, followed by a link to the Bureau of Labor Statistics of the appointment of Commissioner Erica McIntyre, and then a link that shows that McIntyre reports to Julie Su, who I always hear on Bloomberg in the morning, on Bloomberg Radio. She is the Secretary of Department of Labor. I'm sorry if I call her she. I don't know if it's she, he, him, her, they, but I believe she's a woman. Her name is Julie Su, the Secretary of the Department of Labor, who is in President Biden's cabinet, if you remember who Biden is. So, as I mentioned yesterday, there's a lot of cross currents and stories that Wall Street and the government are selling us because it's an election year, because we are at the end of the rope on liquidity. Just the fact that the Japanese central bank and government are hinting and thinking about and hoping for to unwind the yen carry trade, just the fact that they're even mentioning it, it just shows how levered the global economy is. And the reason why I believe, and I haven't chatted with Bill this week, the reason I believe that he's linking these links to the BLS data and who's reporting them, who reports to who, is to show us that this is all a narrative that's being painted for one side of politics. And again, as you all know, I try to be neutral. I really try to be neutral here because I know how divisive politics can be. And I have an audience from both left, right, and middle. But with the elections coming up, there's just so much narrative being sold to us right now. And that's why for months upon months, they have lied to us about these labor statistics. And again, I want to preface and say whoever wins, even if the Republicans win, nothing will change. They will say they will change, and even if the Democrats win, nothing will change. And I noted on Substack Notes as well as the private chat, it's 2 faces of the same coin, right? And I'm going to continue on this quote. That was a riff on my personal take, but this is what Bill continues to say. Quoting Bill Cara, economic data research and report compilations are based on estimates, not facts. That is, we are dealing with subjectivity, not objectivity. The problem with that is that the Secretary of Labor is politically biased to support the wishes of the president, and the commissioner, who is also a political appointee, is biased to support the wishes of the secretary, and so on down through the levels of bureaucracy. So every month, a reported estimate of new jobs is released, followed in time by adjustments. Due to political biases, the initial report is almost always higher than the accurate number. The subsequent adjustments are almost always downward. For some reason, investors react to the narratives generated by the government and Wall Street. The reactions are often extreme. We all know about puppets and puppeteers. The question is, why do so many investors allow themselves to be puppets? And I have, end quote. And I have the answer. It's because we don't want to be wrong. I've posted quite often about the psychology of trading in the markets. We psychologically do not want to be wrong. I would say more than accept losses. Because if we lose money, we can point the finger at Biden, at Trump, at our advisors, at the economy. We can drum up some imaginary reason why we were wrong and we lost money. I am telling you all, we are at a crossroads where you need to think about your principal preservation and saving all of the money you have saved up in your lives. Because we are getting to the point where, unfortunately, many of us will sell at the bottom, not at the top. Did you sell before Wall Street? Did you sell Apple before Warren Buffett? Be honest with yourselves. I do not care. I don't want to know the truth. Ask yourselves, did you sell Apple before Warren Buffett in Q4? Or are you still holding? Because Apple will eventually go to like $100 from here and lower. Mark my words. I don't know the timing. And there is going to be millions of Americans and people outside in the global markets that are just bag holders of Apple, just like they were the bag holders of Intel, IBM, Compaq Computers, BlackBerry, and they're going to be wondering what the heck happened. So I want you to think deeply. Are you going to sell before Wall Street? Because most of us will not. I'm going to read you my R-rated version of what Bill Cara posted. I mean, we literally posted this almost the same time, and I emailed him. I was like, look, it's kind of scary. We think the same. But here we go. Quoting myself. Fake jobs data revised down this AM. Again, the narrative now will be cut. You waited too long to cut. U.S. job markets get biggest markdown since 2009, with 808,000 fewer jobs than previously reported. Yesterday, the pace of housing contracted. Cancellations in July was a record, while rates dipped. 60,000 contracts to be exact. This entire time, they've been selling us horseshit to us. We let all of this happen under the guise of elections and red versus blue. Someone will save us. You are all being fucked. Every second of your lives by this system. Every hour worked. You are a battery for the blob of Wall Street and the government. P.S. Everything is awesome. It's really how I feel about all of this. And I urge you all to schedule 2 hours with your financial advisor and think about the next 10, 20 years of your lives. This is not a new bottom. We're not going to Dow 60,000 like Tom Lee and Kathy Woods pontificates on. It's really scary times. But today's session, pretty muted. Let's keep going here. I covered the breadth and sector numbers and the lack of volume I've covered. But let's see what was strong today. DJT was up 13%. I believe the rumorville is RFK might be pulling out of the race and supporting Donald Trump. Whatever. If Trump wins or if Kamala Harris wins, they're going to print. Wherever your lot in life is right now, it's not going to change much unless you do something to change it. All right, so what else? Marathon Digital up 7.3, IREN up 6.7, MicroStrategies up 5.7, Cura Sushi up 5.6, Toll Brothers Home Builder up 5.6, Hut up 5.4, AppLovin 4.9, Restoration Hardware 4.8, Kava 4.7. Oh, I just want to pat myself on the back here. I read a few posts on Substack from other writers saying, oh, how would you have known Kava would have went so high? If you've been following me since last year, I was pounding the table above Kava when it broke out of like 60-ish range. Keep a close eye, it's going to break out. So I knew. Kava, $102, up 4.7%. Coinbase, 4.5%. Beazer Homes, 4.48%. Hovanian Homes, 4.4%. Crocs, Sandals and Shoes, 4.14%. Sweet Green for salads, up 4.04%. What was weak? Not much. What to watch for free members? Friday, it's Jerome Powell and more of his data-dependent BS. And again, I don't know if free members or pay members know this. I actually have folks from the Federal Reserve as subscribers from multiple states, right? Because the Fed has multiple regions in every state. I have folks from all the investment banks subscribing. I don't know if they're trying to learn because I've looked at some of their, LinkedIn profiles. Like they're probably more worker bees. I am telling you this because even the folks that work at these organizations don't know what's really going on. It's only the few folks at the top of this pyramid that are making these decisions for all of us. And you work very hard for your income, for your 401ks, saving for your families and your future. Now is not the time to refinance your home and go long Nvidia. It just really pains me because I know what's coming. And everyone is just selling this narrative that everything is okay. Just be wary, protect yourselves. Free members, I will see you all after the Thursday session. Premium members, I'm going to cover and focus on gold and precious metals today. I have about 20 plus charts, so stick with me for just another 15 minutes, please. That's my train.
Stand clear of the closing doors, please.